Welcome. Today, we're digging into News Corp's latest earnings call, but we're going to do it a little differently. We're skipping right past the prepared speeches and jumping straight into the analyst Q&A, because that's where the real story is.
So why focus on the Q&A? Well, anyone can read a polished press release, right? But the Q&A is where the company gets put on the spot. It's the pressure test. By looking at the questions the analysts are asking, we get this kind of unfiltered view of what's really going on. The challenges, sure, but also the biggest opportunities.
So here's our game plan. We'll kick things off with digital real estate, then talk shareholder value. From there, we'll look at the powerful Dow Jones segment and the new playbook for news media. And then, of course, we'll wrap it all up with the final word.
Okay, first up, a huge area of interest for the analysts was, you guessed it, digital real estate. And they really wanted to drill down on the performance of Realtor.com. So, Goldman Sachs steps up to the mic and basically asks the million-dollar question. Hey, this growth at Realtor.com is great, but can you guys actually keep it going? Especially when the housing market is still, a bit wobbly?
And the CEO, Robert Thomson, his answer was just brimming with confidence. I mean, look at this quote. He says their strategy is already paying dividends, and we're only at the very start of a recovery. The message there is pretty clear. There's a lot more upside to come.
And you know what? It wasn't just talk. The numbers absolutely back him up. We're talking a solid 9% revenue growth, fatter margins, and maybe most importantly, they are number one when it comes to user engagement. People aren't just visiting the site. They're sticking around and coming back again and again. That's huge.
Okay, so Realtor.com is doing great, but the analysts are thinking, so what? Show me the money, right? And that's exactly where the conversation went next, how all this performance actually gets back to shareholders.
Then JP Morgan comes in and really puts them on the spot about the share buyback. They basically said, look, if you guys really think your stock is such a bargain, why aren't you buying back shares even more aggressively? It's a fair question.
And the answer was simple and powerful. 4 times. They've already accelerated the pace of their buyback program by 4x. That is a massive signal to the market. They're not just saying the stock is cheap, they're putting serious money behind that belief.
And you see that same confidence when it comes to their pricing power, especially at the Wall Street Journal. It's this classic tug of war, isn't it? On one hand, you raise prices, you risk subscribers walking away. But their bet, their strategy, is that the journal is so premium, so essential, that they have elasticity. They can stretch those prices higher because people will pay for the quality.
All right, let's shift gears now and look under the hood at what's really driving this whole machine. The Dow Jones segment. I mean, this part of the business has been an absolute powerhouse for them, consistently.
And the analysts really wanted to understand the B2B side of things. That's business to business. They were digging into the professional services they sell to other companies, asking, okay, where is all this amazing double-digit growth actually coming from?
And the CEO was ready with very specific answers. He pointed right to what he called excellent performance in their risk and compliance division. Which, let's be honest, in today's world with a million new regulations, that business is a goldmine. And then he called out a huge rebound at Factiva, which is their massive news database for pros. And this table just lays it all out, crystal clear. Look at that top line. Risk and compliance is up a whopping 16%. Then you've got Factiva, bouncing back with 9% growth, and now they're even plugging in Gen I to make the search features better. This isn't just random growth. This is smart, targeted, and happening in really high-margin areas. So after all that talk about high-growth digital businesses, the conversation pivoted to, well, the old-school part of the company, the traditional news media. But, and this is a big but, the story here was surprisingly about profitability. An analyst from Macquarie asked this brilliant question. They basically said, hold on a second, your revenues in this segment are almost totally flat, up just 1%. So how on earth did your profits, your EBITDA, shoot up by an incredible 67%? On the surface, the math just doesn't seem to add up.
And here's the solution to that puzzle. It's all about the margins. It wasn't about selling more papers, it was about being way more efficient. In just a single year, they pushed the profit margin of that whole business from 3.3% up to 5.5%. That single leap is the key to that massive profit growth.
So how'd they pull it off? It was a multi-pronged attack. They found big savings on printing in the UK, they stayed super disciplined on costs down in Australia, and get this, digital ad revenue at the New York Post absolutely surged, up 23%. This wasn't luck. It was a deliberate strategy that totally paid off.
All right, we have covered a lot of ground, so let's boil it all down. After all those questions from the analysts, what are the key things we really need to walk away with?
If you remember just 4 things from this Q&A, make it these. Number 1, Realtor.com is on fire, even in a tricky housing market. 2, they are serious about shareholder returns and are buying back stock like crazy. 3, the Dow Jones B2B business is a growth machine. And 4, that old news division has figured out a new and much more profitable way forward.
Which really brings us to our final question. The analysts dug in and they uncovered real strength in digital, a serious commitment to shareholders, and a really impressive turnaround in their legacy business. So the question isn't just about whether this was a good quarter. It's bigger than that. It's whether we're looking at a company that's truly poised for a breakout.